Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. Alright, it would seem it's that time again. Q2 earnings call is on the 26th of July, so I thought I would go through my predictions of what we can expect. I'll show you exactly how and why I arrive at every number. This will be based on an econometrics model using deductive reasoning where possible to try and hopefully come as close to the real answer as we can. In the past, I've used various methods to estimate earnings, such as estimating the average selling price of every model from each factory, then multiplying the average price of each model by the quantity sold. Seems simple, right? But my method of taking whatever Tesla sold the previous quarter and then adding on the additional deliveries always seems to be closer to the real number. So this is the method I will choose. The number I'm referring to is revenue from autos, excluding regulatory credit income. In order to do this, I need to work out as best I can the quantity of each model from each factory. From there, we can multiply or remove the revenue in sales from the last quarter to give us our numbers for this quarter. Although we are given the official delivery and production numbers from Tesla, it is broken down into Model S and X deliveries and Model 3 and Y. However, we are fortunate enough to be given a reasonably close number as the numbers produced by Tesla in China. For Q2, we have a total of 98,071 units produced in China, compared to the total of 204,081 Model 3 and Y units produced in Q2, implying that approximately 106,000 Model 3s and Ys were produced in Fremont in Q2. However, these are production numbers, and we're looking at revenue, which means we need to use delivery numbers. We're given the Model S and X delivery numbers from Fremont, but we still need to do some calculations to estimate the 3 and Y deliveries broken up from China and Fremont. Luckily, the China production numbers are also broken up into Model Y and Model 3, giving us a total production of 66,000 Model 3 and 32,000 Model Ys from China. As for Fremont, Tesla seemed to have been fairly consistent at around 50,000 units of Model 3 from Fremont each quarter. I think this is due to Tesla wanting to scale up the Model Y over the Model 3, simply because it's that much more profitable, which makes sense from a business perspective. Anyway, if we use 50,000 Model 3s and have 106,000 3 and Y units from Fremont, then that means 56,000 Model Ys produced at Fremont, up from about 48,000 last quarter. This is a significant ramp still. This is mainly what was responsible for the record deliveries. A quick side note, 106,000 scaled annually is 424,000 units. Tesla say their capacity for Fremont is still 500,000, implying 75,000 Model Y capacity is possible from Fremont, although those capacities were given before the Gigapress was implemented, along with other manufacturing improvements. I think this is often overlooked and shadowed by Texas and Berlin. We've now broken down all the factories and models for production numbers, but we're still trying to calculate financials here. You only earn revenue on cars sold, not produced. We now need to estimate how many of these cars were actually delivered. Well, we know the total production for 3 and Y was 204,000 and deliveries 199,000. That's a difference of 2.3%. If we remove 2.3% from the China and Fremont delivery numbers, then we have an estimate for our deliveries from each factory. This comes in at 1,890 deliveries for S and X, then 48,843 for Model 3 Fremont, 54,538 Model Y Fremont, 64,420 Model 3 Shanghai, and 31,558 Model Y Shanghai, giving our total deliveries of 201,250. Great, so all the numbers check out. From there, we compare the difference in deliveries for each model from previous quarter. With those numbers, we can estimate how much revenue each model generated from each factory to work out the difference in revenue. Starting with the S and X. Despite the launch of the Plaid this quarter, and even though Tesla produced no S and Xs in Q1, there was still more S and X sales in Q1 due to what was available in stock, giving us a deficit in sales from the previous quarter of 130. Except, of course, this is now the new Model S that is selling. The prices have increased with the new Model S, but not only that, you can only buy the more expensive Plaid version currently too, which at $130,000 is nearly twice the starting price of the old Model S at just $70,000. Last quarter's numbers included the more expensive Model X though, and Performance Editions, although the Performance Edition was only about $92,000. For the previous Model S and X versions, I had an average selling price of $81,000. Now, although the Plaid does start at $130,000 today, the original price was actually $120,000, and I'm willing to bet that all these orders were from that original price, before Tesla raised the price. likely due to so much demand. There may have been some stock of the old versions that sold too, but it's very hard to calculate. I'm also ignoring any optional extras like Arachnid wheel upgrades. I try to balance other probabilities out with probabilities of other events. Therefore, although Tesla sold 130 fewer S and Xs this quarter, they might have sold at an average selling price of $39,000 more. As hard as this is to calculate, we're only dealing with a very small quantity of Model S's this quarter anyway, so any margin of error will not have a huge impact on our numbers, which is good considering how many unknowns we're dealing with. That means to find the difference in Model S and X revenue this quarter, we'll need to multiply the deliveries by an extra $39,000, and then subtract the difference in quantity, 130 deliveries, by the previous price. In case you were wondering, this is the same math of multiplying the S delivery ASP of 120,000 by the quantity and subtracting the difference in deliveries by the previous ASP. Okay, that was a lot of math for a number that doesn't have a significant impact, but gives us an estimated increase in revenue for the S of $63 million. Okay, next, Model 3 from Fremont. Due to Tesla not delivering all the models they made, we had fewer deliveries of 1,865. Now, as we know, Tesla have been changing their prices from the Model 3 at Fremont. For example, we had 36,990 for the standard range in March, then 38,990 in April, and the current price now is 39,990. Of course, though, we're looking for deliveries for the quarter, not orders. A lot of these deliveries were likely ordered in the previous quarter when the price is lower. Perhaps half of these orders came in at the old price, and then another half at the price from March when it was raised at $2,000. Therefore, I'm going to increase $1,000 onto the ASP for the Model 3. We then also need to deduct the deficit of Model 3 deliveries from Q1, which I have an ASP of $43,000. This results in Tesla doing $31 million less in Model 3 Fremont sales in Q2. Okay, now for the Fremont Model Y, and we have the same issue. In fact, Model Y is now $4,000 more than it was in April, when it was just $49,990 for the long-range version. But again, inconsistent pricing over the quarter, as the Y cost $51,500 in May. But due to the backlog we've seen from the demand, I think the majority of these sales were ordered before the price increase. But it doesn't stop there either. As Q1 also sold the standard range Model Y, Tesla stopped selling the standard range in mid-February, and the waiting list was 2 to 6 weeks before then. So I'm going to assume that just about covers all standard range deliveries, as in there were none in Q2. However, standard range was only $42,000. This would therefore reduce the average selling price of the Model Y in Q1. If half the sales last month were standard range, then that is an $8,000 increase in price for half of the Model Y orders. That would mean on average that the Fremont Model Ys had $4,000 average selling price higher than Q1. Of course, we do have the extra sales from this quarter too, so we need to add them at the adjusted ASP for Q2. So we have Model Ys with lower price tags and the cheaper standard range model in Q1, resulting in over $500 million additional revenue for the Model Y in Fremont. A huge jump from Q1. And that concludes Fremont. Now on to Shanghai. These earnings estimates are going to be a lot of work when we eventually have Berlin and Texas to factor in too. Anyway, thankfully the Model 3 in Shanghai didn't seem to fluctuate in price anything like Fremont. We do have fewer Model 3s in Shanghai this quarter than the previous. The production numbers simply weren't so high, and there are rumours circulating as to why the production line may have been down for some of the period. Anyway, that would mean almost $130 million less in revenue for Q2. The Model Y in Shanghai, however, has doubled in production numbers, and Tesla haven't increased their prices anything dramatic either. Tesla were only selling long-range and performance versions in Q2, so the average selling price will be significantly higher than the Model 3, giving a whopping $800 million in additional revenue, generating a total revenue increase of over $1.2 billion in auto sales. You might think this is an elaborate way to do something that seems reasonably simple, but it always seems to be the most accurate way I arrive at my figures. Now, the average estimated model price we use do not include FSD. We therefore need to calculate the additional revenue from FSD, bearing in mind that the Q1 auto revenue we are building on does include FSD. Now, this will likely get even trickier with subscription models next quarter, but FSD is not a major part of revenue at this stage, although it is just about all profit. I set FSD at $10,000 with half of that revenue as deferred revenue, which will not count as our revenue until further advancements are made in FSD. From there, I use a 25% adoption rate from the US Teslas and 2.5% from Chinese. Now, there have been some advances in FSD, so it's possible Tesla may release some of the deferred revenue. But these versions have only been in beta and not rolled out to the public. So I'm going to assume that Tesla have not been able to release any FSD deferred revenue. Anyway, when we calculate all of that, we actually only end up with an extra $7 million in revenue. This may feel low, mainly due to the major increase in deliveries coming from China's Model Y, and China having such a low adoption rate for FSD. But anyway, it's a tiny part of the formula. Okay, so let's add it all onto the previous quarter revenue, which was $8.5 billion without regulatory credits. When we add the additional revenue, we come in at $9.7 billion. Incidentally, that's around a 15% increase in revenue over the previous quarter, of which, bear in mind, the previous quarter took from stock, and this quarter added to stock. And Model 3 Shanghai numbers were also on the low side. Given that, this is fantastic growth from just last quarter. Then we want to include regulatory credit income. Last quarter, we had the largest ever revenue for credits at $518 million. However, Tesla's largest regulatory credit contributor was FCA, or Fiat Chrysler, which has now merged with Stellantis, and as a result, they no longer require regulatory credits. Tesla was supposed to sell regulatory credits to them through 2022. It's unclear as to what the rest of 2022 will mean, due to FCA no longer requiring them. The deal may not have been for the whole year. On the other hand, Volkswagen has started buying credits from Tesla in China. I'm therefore hesitant to say that Tesla will receive a similar amount again this quarter. I'm going to reduce the credits to $400 million, as I feel like that will be a number with minimal margin of error, taking total auto revenue to just over $10 billion, which is the first time Tesla have ever broken the $10 billion barrier in auto revenue. I think we've done a thorough job in estimates here. I really can't imagine the actual number deviating too far from this. Now we need to move on to profits. We need to estimate the gross profit margin. Now the average sale price was up from $46,000 to over $48,500, or over 5%. Now that is a significant increase in average selling price. This was mainly due to so many extra Model Y sales, what with the Model Y being a more expensive vehicle and not selling the standard range. Of course, the higher Plaid Model S helps a little too. Very little of it was actually due to raising prices, which, as I explained, will be felt much more next quarter, but we know the Model Y does have a better gross margin than the 3. Actually, we have 21,500 more Model Ys and 5,000 fewer Model 3s than the previous quarter, so this is around an increase of 10% in sales being Model Y. If Model Y has a 5% higher margin, then that would increase overall margins by about 0.5%. But Zachary Kirkhorn on the Q1 earnings call also said that Tesla incurred a $200 million expense getting the new Model S production lineup, which went into the cost of goods sold. Well, if you added $200 million onto the Q1 profits, then the gross margin goes from 26.5% to 28.7%. If we then add the other 0.5%, then we're at 29.3%. This would assume that there are no other costs incurred that went into COGS, like we saw last quarter. This would give us the highest gross margin to date, the previous high being 27.7% in Q3 2020. That then gives us almost $3 billion in gross profit for autos. Now we need to add all the other revenue. Calculating energy is much harder, as we're not given equivalent delivery numbers, such as how many megawatt hours were deployed in energy storage. It's very much guesswork, with very little trend to base any inferences. Therefore, I'm going to take an average of the last 4 quarters coming in at $550 million for energy. This side of the business is significantly smaller than the auto business, so our margin of error is less important here. I just want to make sure I try and come within one standard deviation of the answer as close as possible. The revenue for services has been increasing over the quarters, with it being particularly high last quarter. I think I want to stick with last quarter's figure due to it increasing so much from previously at $893 million. It usually only increases about $100 million a quarter, but the last quarter it jumped $300 million. That gives total revenue at a record $11.5 billion, almost $1 billion more than the previous high in Q4 2020. Now for costs. For energy, I have equally calculated an average cost of the previous 4 quarters coming in at $572 million, and equally used the same figure as last quarter for the cost of services at $962 million, resulting in a total cost of revenue over $8.5 billion, giving a total gross profit of $2.9 billion. Then we have general OPEX. Last quarter R&D was significantly high. We were told a lot of that was due to getting the Model S Plaid complete, which was a one-off. So I'd like to use an R&D figure from the previous quarter. Of course, Tesla is still working heavily on the 4680 batteries, as Elon's recent tweet would also suggest, along with FSD. So I will use R&D of $522 million. SG&A was particularly high last quarter too. We were told this was due to setting up infrastructure and support for China and Europe. Also, I don't expect to see so much come out for stock-based compensation, as Elon's bonus is dwindling. Of course, Tesla are growing too at the same time, so SG&A will naturally increase with growth. Therefore, I'm going to place a round number of $1 billion. I'm not aware of any restructuring, so I'll leave that empty. We also have to include Bitcoin. Tesla holds about 41,000 coins in its treasury. We think Tesla paid around $32,000 per coin. We have to take into account the lowest price Bitcoin had over the quarter, which was around $29,000 in June. With a loss of around $3,000 a coin and around 41,000 coins, then that comes in at $124 million. As we know, this is not a real loss, and we would assume that Tesla can hodl with the best of them. Not to mention Bitcoin has recovered since then, but we have to add this into the financials. Total OPEX therefore coming in at just over $1.6 billion. That then gives us a total income from operations of $1.1 billion, up significantly from Q1 at under $600 million. Tesla have nearly doubled their income from operations within one quarter. You see, this is why I say at times, it's going to be hard for Tesla to suppress profits much longer, and not just from the new factories, but when the existing factories are fully ramped up even, particularly Model S and X. I think people are too busy discounting Texas and Berlin that they forget about the advances happening in Fremont and China. And we have interest too. I've taken an average of the last 4 quarters and come to $150 million in interest. This leaves us with $832 million income before tax. At 21% tax rate, we're left with net income of $657 million, which comes in at an EPS of 58 cents. Bear in mind the Bitcoin cost is meaningless, and without that, Tesla would have been at 68 cents EPS instead. GAAP income is finally more than regulatory credits, even despite the $120 billion hit from Bitcoin. There we have it, the platitude that Tesla only makes profit from regulatory credits can finally be put to bed. Now, as I don't believe Elon would have received a large bonus this quarter, I'm going to bring down stock-based compensation from $614 million last quarter to just $500 million this quarter, creating non-GAAP earnings of $1.15 billion. Okay, that was hard work. I used to do these for my options trading. It was different when you had options contracts riding on the results. Sometimes the numbers could be out significantly, and you could get a 10% jump in stock price, which was easily doubling your money on an options trade. We don't seem to see as many disparities now, and even when we do, the stock price is going to take a lot more than that to move these days. So, although I think this is a good result, I don't see it as a needle mover, and I'll not be trading options. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.